Michael, Yash,
Yep.
welcome to the studio, guys. How are you?
Good.
Doing good. Thanks for
Beautiful
having
day.
us.
Of course, yeah. This is our second built in the Presidio
Yes.
podcast here, or
Yeah.
recording, whatever you want to call it. But yeah, really looking forward to digging in with you guys because you spend a lot of time in the lending markets, right?
Yes.
And that
Yes.
is, I don't know if that's one of the oldest sort of industries, but lending has been age of time, right? And for whatever the reason, there's perennial issues in Bitcoin lending,
Yep.
and all of the happenings of the BlockFis and the Genesises and whatever else is from the last cycle to, still currently doesn't feel like it's figured out in a way
Yep.
that is, I don't know, maybe built in a way that's maybe for Bitcoiners. But anyway, love to dig into you guys, and maybe we'll just start with how did you guys come up to the point of getting into Surge, right, or getting into, hey, we are going to go out and figure out how to do lending the best way, because it's a complicated market, right? I mean, the banks historically built these massive monoliths on Wall Street because that was the way to build trust, was like, don't have to worry about me and my bank. We're not going down. Look at these marble columns, right?
Yeah.
And so it's just historically, it's a really fascinating and challenging industry, but, deeply important. Obviously, it's really, financially important. A lot of people use lending. People lend off assets. So why not use that with Bitcoin? There's a lot of things that make a lot of sense. But anyway, I digress. You guys are building Surge. Love to hear more about kind of your backgrounds and sort of how you got into this position. And then let's certainly dig into what you guys are seeing sort of in the lending market, any history or interesting facts you guys have there. But maybe we'll start, I guess, Michael, we'll start with you.
Sure. Yeah. So I'm Michael Borglin, and I am Chief Product Officer here at Surge. And I have been in the Bitcoin space for, gosh, I think about 8 years now, since 2017. I started out doing Lightning, then moved into self-custodial at Casa, spent a few years there building out their products, and then moved over to Coinbase, where I was an engineering manager on their custody and prime brokerage products.
Perfect.
So
Perfect mix.
Yeah, I mean, I got to see some exciting stuff. I mean, we, went from 4 billion to 100 billion under management. It was pretty wild. And then now, I want to take some of that like excellent custodial technology and get it a little closer towards the users and give them like a really good non-custodial Bitcoin product.
Yeah, makes total sense. Totally.
Yeah. Yeah. I'm Yash Belavadi. I'm one of the co-founder and CEO at Surge. It's been 5 years in crypto, mostly in DeFi, non-custodial products. I've helped a bunch of other entrepreneurs to build products and launch. Tried my ideas and failed and like launched again. Before that, I was running few ventures in Web2, like in SaaS being like primary focus, and then some consumer apps as well. I did that for like a decade. I've been more of a founder and operator. I was based in India, Bangalore, know that market pretty well, and then started working on the Western world later in the decade, and got into crypto, got into Web3, and I became a product officer for one of the non-custodial wallet. That's how I got introduced to the space. Spent a lot of time with different ecosystem, and Bitcoin, of course, happened to be one of them. Ethereum, Solana, Cosmos, so many ecosystem out there. So the Surge was started in 2024, mid 2024, as a simple idea to like, how can we scale Bitcoin? How can we build more apps on top of Bitcoin? That was the original idea of like Surge. And then more time I spent on it, and more we like figured out, and then we realized, is the star use case of Bitcoin is lending. So that's where we completely pivoted to lending, and since then we have made a ton of progress.
And do you guys think, going back to kind of what I was saying before around, lending markets, obviously extremely historical. They've been around for forever, and talking like Wall Street, whatever. And I remember hearing the concept of DeFi back in 2020 during DeFi summer, right? I was actually doing research with a business professor at the time, and for me it was like, wow, this is incredible. Like, you can actually do these types of markets without needing to go to the bank, right? You can have sort of peer-to-peer lending markets, and it seemed so fascinating, right? It seemed like, wow, this is actually the future, right? This is doing something meaningful. You're taking out these centralized parties. You're kind of, democratizing finance in many senses of the world. And, we can kind of continue going down that sort of ethos. But, it doesn't necessarily feel like it's been figured out. And it always seems like, 2 points. It seems like it always trends back towards centralization.
Yeah.
Because like, I think there's still inherently people want to trust something, right? They whether it's, a company or whatever. So I think there's some psychological side of that. And then I think the other side of that, non-psychological, but the actual market structure is, these are bank businesses. These are, deeply involved in political side, deeply involved in the regulatory side. Like, so, putting those kind of two parallels together, and you guys can certainly discuss what's most interesting to you or what's most relevant, but you still have certainly the social side, the technology side. Is this going to be successful because people are ready for something like this where I can take trust out and wrap their heads around that? And then B, like, is the market even ready for that? Like, is there things that have changed in the last, 5, 6, 7, 8 years, whatever, that are kind of open now that DeFi is sort of, or lending non-custodially is now ready for prime time? Like I say, it's going to be successful, right? So pretty open-ended question there. Whether you want to layer in the block buys and all the other stuff from the last cycle. But I really just want to, kind of hear your guys' take on where you think the lending markets are, where you think this is all headed, why now, what didn't work in the past. However you guys want to take that.
Yeah.
Do you want to take part of it? Yeah.
Yeah. So I'll probably like go back in time.
Yeah, totally.
2017.
To the beginning? No, it's just 2017.
2017. Don't worry. So
2,000 years ago.
And then, you can follow up on, what's changing now that's will make non-custodial one of the success. So far, we have not seen any single player, like, if you want to name one person or one company that has been successful in non-custodial lending, there's zero right now, to be honest, right? There are a few who are working on it, like we do, but there are no clear winner.
Mm-hmm.
So that's one thing we need to like clearly acknowledge. So if you look at 2017, like I think that's when the first lending product in Bitcoin only platform came out, as I recall. And that's when even like the Ethereum side of story was also catching up. So 2020 was DeFi summer.
Right.
That's when like the crazy crypto cycles.
Crazy.
That's super crazy. So now from day one, the way it is kind of designed is like custodians. I'm sure in 2017, the regulations were unclear. And then I can clearly correlate that to the Bitcoin cycles. Whenever the price goes up and things catch up, there's a new player pops up.
Mm-hmm.
And again, they kind of follow the same ideology, which is trust, don't verify. Well, Bitcoin is all about like, don't trust, verify, but lending being the opposite. So I see like two things in this. One is the existing mental model of how banks work and how the market things work. It kind of makes sense. And also like the market maturity. Like think about in 2017, like how many Bitcoiners were looking for a loan on their Bitcoin. I think these are like very early believers, mostly whales, mostly those who are holding large amount of Bitcoin back then, I'm sure. Like who are those guys? Majorly miners, like majorly individual miners who were actually like mined before 2017. I think that's the market. So the product kind of served for that market. So what do you do? Like you would go like one-on-one, you would, do more of a white glove services. The custodian model kind of made sense. And in every cycle after cycle, people just replicate the same thing. Like there's a next guy with probably a better experience with better white glove services and more options, probably less, interest. So I think that's how it has been so far. I think as probably in last 2 years or 3 years, now everybody's like, oh, okay, you know what? Especially after, BlockFi and FTX and all this centralized blowups. People are like, okay, now I get it. I mean, Bitcoin is on-chain, verify, like, don't trust asset. It's not like any other collaterals that are out there. So this has to be different. I think that's where I'm seeing that trend change, that now people want to build a trustless or trust minimized. I mean, trustless is like, I don't touch that. Even in 2022 2022, there was a lot of search in building scaling solution or like a trustless Bitcoin scaling solutions. Okay, Bitcoin can do this. Okay, let me put a layer on top of it, which can be trustless, and people can build lending, borrowing, whatever they want to build, like perpetuals, right? That haven't been so successful because of course Bitcoin limitations, and there is, I mean, what you can build on top of Bitcoin, and it's not easy to build on Bitcoin. It's really hard to like build on Bitcoin. And this is a little bit of a context of what has happened so far. So one is since 2017, probably the first Bitcoin native or like a Bitcoin only lending started. Then it kind of kept growing as the cycles or like a Bitcoin price started, appreciating, or like, people started believing in Bitcoin and seeing, okay, this is another store of value, it's still gold, and all these narratives. And then in 2022 or in 2023, so then there was like a lot of interest on how can we build application on top of Bitcoin and make it trustless and build a lot of use cases. That has not been so successful. I would say that's a good start. It's a really good start, and making people realize, oh, there is a need of a solution like that. The older or like the products that are out there in the market are very centralized, or like they kind of make sense to the market, or like the high net worth individuals or whales or people who are having higher Bitcoin holdings.
Yeah, it's like you see that now, right? Like all the, I said, major, Bitcoin exchanges even all kind of, again, re-rolling out kind of these lending models, but I don't think that there's structurally, again, I haven't evaluated a lot of these, like structurally a lot of change there. It's still kind of going through a KYC door.
Yes.
On some login process that you have with that service, and then the asset is what just moves under the hood. But yeah,
maybe I'll answer in another way by talking about like custody and the problem with custody, and then sort of like why now. So I think that lending has centralized in a custodial faction for the one reason that Yash mentioned. This is sort of how like traditional lending works nowadays. There's a bank, there's a banker, you go to your banker, you get a loan. But also from a technical perspective, it's a lot easier to have a custodian than a non-custodian or a self-custodian solution. And that technical hurdle, I think, is one of the biggest reasons why it hasn't been adopted widely. And only recently have like those technicals become strong enough and easily like dispersed to the community that we've been able to build a solution that has both the flexibility, but also the non-custodial technical aspect.
And are you guys, so technical side being certainly one aspect of, hey, it's just completely different model of how you market, make both sides of lending, the borrowers or takers, et cetera, like one side of that. Is there been any changes on sort of like the legal structures that have like, and again, haven't necessarily evaluated this. I know there's tons of conversation around like de minimis taxes and KYC and MTLs, blah, 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 all the stuff. Has there been like positive changes on that side that have helped or be like a tailwind to these sort of decentralized non-custodial type lending options, or is that still kind of an issue that is going to maybe be something in the future? Like let me back up a sec. Is that one of the reasons why people have to go through centralized forces? So technology being one, or some sort of esoteric legal reasons?
I'll say a little bit, and then I'll let Yash talk. But I think it's generally easier for people to use like the existing frameworks and solutions. And the existing frameworks and solution was, hey, go get your MTLs for every state in the union and give us 15 million in 5 years, and maybe we'll get you there.
Yeah, they're crazy expensive.
So that is the paved road. But so to go outside of that, there was some legal risk in 2020,
right?
And that's where I'll hand it off to Yash to sort of describe like our legal structure that we're using briefly, and like why I think now like it's kind of like a tried and true path.
Cool. Yeah. I think this is a topic like which I was probably researching and like reading a lot about, is when centralized exchanges, like FTX blew up, there was a lot of importance on DEXs, right? The decentralized exchanges. I think it's in a way like validating the legal structure of those decentralized exchanges, and even like protocols like Morpho or like Uniswap. I mean, they've been around for like years now, like 10 years now.
Yeah, they've been around for years,
Yep.
and they haven't been
Yep.
taken down, but
Yep.
legally operating
Yep.
inside the
Yep.
United
It's
States.
kind of that gray area.
Yeah.
Just yeah.
Well, precedent is this. I'm not a lawyer, not legal advice, but
It was CPO, not CLO.
right. But when a business has been operating for long enough and they get like sizable enough, they get political power,
Right.
and even without a law being passed, like, especially in America, like you don't have to pass a law. Like things are legal until like a law is against it. This is not a dictatorship, but these companies have like put that path ahead of us, and we're using very similar legal frameworks in which they operate to operate our business.
Yeah.
We just think we can go one step forward on the technical aspect and pull in that non-custodial aspect.
Yeah. I just always had a mental model of like when non-custodial lending and what you guys are building and sort of these markets do actually get material size to them, right? Where they actually start impacting, I'll just say the banks more broadly, like their businesses, right? They're going to use their power structure in Washington or wherever it might be, the power centers, to legally be like, okay,
This is not
let's go write those rules now.
Yeah.
So what it sounds like is those rules aren't written yet, and maybe that's because it's on the positive side. This is something that is legal and we can do it versus, oh, it's just because we're not big enough yet. So,
Yeah.
I guess being the question too is, into your point earlier, Yash, right? There's a lot of like ebb and flow that kind of correlates with the Bitcoin price, and people get really excited, and then it kind of fades away, and then there's a blow up, right? It kind of has these, these ups
That's
and
up and down,
downs, and generally speaking, it feels like we're in obviously one of those upticks. There's a lot of talk around the lending markets that are growing. Have you guys seen that more broadly? Recently, I guess I'll say, as the Bitcoin lending markets are actually kind of starting to take off again, or are they kind of midway? Or
I would definitely say that 2025 and 2026 is a maturing phase where a lot of the existing players are starting to build out infrastructure, but they haven't released these loan products. And I'm specifically talking about companies like JP Morgan or Vanguard or Morgan Stanley. It wasn't until like the second half of the year last year that these companies even allowed IBIT in other ETFs. And what comes after that, some of them are already announced, leveraging your ETF products to take a loan against.
Yeah, like margin and stuff.
So these things, these big multi-billion, trillion-dollar banks are building these products. They just haven't released it. And then they're going to release it starting at institutions, then high net worth. And only at the end will it come down to retail.
Yeah.
And we think we've got years ahead of when they do that, because we're starting at a permissionless protocol, so anyone can opt in whenever they're ready.
And you guys don't necessarily have to answer this, but obviously you guys are building a product, you guys are raising funds, you guys are trying to attack this market in a sophisticated way. What are kind of your projections or goals of thinking, hey, here's the lending market, we think non-custodial or Bitcoin direct, however you want to phrase it, will be X percentage of that market, and then us, Surge, we think we can be X percentage of the market. Like, what is that? Have you guys kind of defined what you think that TAM is going to be in 5 years, and what percentage of that market you can theoretically go out and achieve? And more so curiosity of how are you seeing these lending markets kind of taking off into, as you've just mentioned, the next couple of years, right? A lot of these companies are building products that are, maybe playing in the same field, but A, how big is that field? And then B, how many yards of that football field are you guys thinking that a product like Surge is going to be able to take?
Yeah, it's kind of hard to like put a number on it. Yeah, I mean, like,
how high can Bitcoin go? How low can fiat go? But go ahead.
Yeah. So one thing I'm kind of like pretty positive about, like, or observing in the market, I think there are enough number of centralized players already. I think recently there's one more that got added,
every day.
Supposed to be, on the other side of the play field. So that's, I think, super saturated. I think there's enough number of players. And another problem that I see on that side of the market, or like players, is they're all optimized for a different type of Bitcoiners, or like, the large holders, or, high net worth individuals, or whatever, right? They're definitely not for retail. It's no doubt, right? And there are like few like Strike, and so they're also focusing on retail. They're it all we can see by the ticket size that they are like, when you're taking a loan, what's their limits, what's their, like how much you can actually take. It's a minimum of like probably $10,000 or $20,000. That kind of gives you an idea on like what is their focus area is. So now there is few players who are trying to do more like retail side and trying to keep it non-custodial. I think as interest towards the institution grows, like more products on Bitcoin, like lending or like, what more you can do with the Bitcoin that you hold on the institutional side increases. I think that grows the mind share.
Mm-hmm.
So now retail looks into it and say like, okay, why don't I be part of it?
Mm-hmm.
And I think non-custodial is like the right way to do it because they don't have all the privilege that institutions have.
Mm-hmm.
They don't have got all the probably the expertise and the lawyers and whatever, right? So they don't have that. I think that's where now the trend is more towards the retail. I see it as more orthogonal, like as the institutions adoption and like more and more institutions getting on board, I think retail is also going to grow equally. And Bitcoin is like, this is a huge market.
Yeah,
it's a pretty huge market. And now on the retail side, what does it matter to them? Like if you like build another like super custodial, from cost perspective, it doesn't make sense, right? To get like all the license and then the operating side of it, you can't keep it on chain and automated. Then you need to have intermediates, and then you're introducing a lot of cost, and then you're also introducing a lot of risk and trust factors, one after the other, after the other, which is not ideal for a retail. Like, and very hard to build that trust in retail. Like, what you would do, like, if you look into the product and you say, okay, I can borrow against my Bitcoin. All right, I'll try. I put some Bitcoin to try. This is how I've been observing, at least like in our product, as well as the product that I've seen in the market was trying to be retail. All they do is like, they will withdraw like $100, like $200, and they want to see what happens next. The retail want to see what happens next. If they can't see their Bitcoin, and you will say, oh, you know what? We are not going to re-hypothecate it, but trust us, right? So I think that's not going to play out really well for retail. Yeah, and that this is, to be honest, this is a growing market that we see as a huge.
Maybe one data point I'll add on is Coinbase, our favorite company in the world.
It's a joke.
Recently released a lending product through Morpho,
right? And
it's been out for about 12 months. And that product just alone has brought in about $1.5 billion, maybe $2 billion.
Really?
Yeah.
And it's only been out there for 12 months. And I think that our product is as fast as execution as that, except we do it in a non-custodial way.
Yeah.
So I think if they can do that in a year, 4 years, we can do more.
Yeah.
Yeah. I mean, look, like
that's a good,
the ETFs launching, I thought was, there's obviously great things as it does for Bitcoin in terms of people's exposure and ability to stick into brokerage accounts and retirement accounts, et cetera. But I had this, thought, fear, concern, whatever you want to call it, that, well, you're kind of creating this sucking effect, the sucking sound of Bitcoin back into these, Fidelities, BlackRocks, whatever, because there's so many things that you can financialize on top of them, right? Like, it's very famous that a lot of high net worth and people, they never sell their stock. They never sell their portfolio. They take margin loans out, right? And you can go and get, a 5.5% or 5% or whatever it is, margin loan pretty much instantly, I think, from Robinhood right now. And, I feel that draw. I'm like, ooh, like that's pretty sweet, right? I can, go and immediately kind of get this quick margin loan. And, there's that temptation to, okay, do I convert this Bitcoin into an ETF shares? Do I send this Bitcoin into something, one of those types of providers? So I'm really excited that you guys are actually doing this, because I think it'll keep more Bitcoin in self-custody. Yeah. It'll keep more Bitcoin sort of out of the, financial institutions, whatever you want to call them, and actually kind of promote self-custody. But I do think building the financial services around Bitcoin are a key aspect to, kind of preventing that Wall Street kind of takes over Bitcoin kind of thesis. So extremely excited you guys are building it. I guess sort of last question. And you mentioned earlier, Michael, building the tech was kind of like the hardest part. The tech is now finally, through your guys' efforts and work, ready for kind of prime time. I still think there's probably some lagging sort of, tinges, and I think you mentioned it earlier, Yash, around like how do you kind of convince people that this is okay? Like there is a safety blanket in the centralization process.
Yes.
What is kind of like the hardest thing now, right? So you got the tech, you're ready for launch. I've used your guys' beta. It's a slick product. It works fantastic. What's kind of the hurdles now? Is it getting liquidity on both sides? Is it getting, users to adopt it? Have you done like sort of, user acceptance training or whatever the term is? So like, what percentage do you think people will actually kind of, want to lend their Bitcoin out or take a loan off of it rather? I guess broad question of like, how do you guys now go out and execute this market knowing that the landscape has been kind of a checkered past, if you will?
Yeah, so I'll start by saying we're in private beta right now, so the full product is not released.
Ooh, I'm private.
So we have a private beta, and people are trying it right now, and we want to do a full open beta by Bitcoin 2026, and that's in April. And what we want to have complete then is have our non-custodial system out there and have at least 3 partners that are part of the non-custodial distributed custody system. We also want to have a multi-market available. So if you go to DeFi today, you're going to get a variable rate market. That's always changing. But a lot of people really want a fixed rate loan. So right now we're building out both a variable market and a fixed rate market. And we're working with our different liquidity providers. We're also finding new liquidity providers. Like, how do they want to interact with funding those systems? And how do our borrowers want to interact with those systems? So I think the critical piece right now that we're ironing out is what does the market structure look like to bring in borrowers and liquidity providers while giving everyone like the flexibility to get in and out of the market that they want.
Yeah, I think so. The problem, like the immediate challenge, so that we are kind of observing or learning now is it's like a chicken and egg problem. In our system, all these risk or parameters are priced explicitly. Like what I mean by that. So we clearly put all these parameters on chain and somebody can verify. In our case, the LPs. The liquidity providers who can come in and say, hey, I'm giving you liquidity. Bitcoiners can go and borrow and here is the yield, right? So we're clearly putting those parameters on chain and priced explicitly, which is one is haircut, like, what is the LTV? It's 50% to start with. And what is the liquidation looks like? At what stage? Can I see it clearly on chain, right? And what's the yield look like? Can I see it on chain? Like, okay, this is my yield, like with variable or fixed. Can I see it clearly? One of the feedback or like, what we are hearing from the LPs is like, hey, I want to see some Bitcoins locked up there. Like, yes, this all looks great, which is a huge difference from the existing system. So let's say you go to any centralized player right now, you just need to trust in their opaque box and say, okay, I'm going to give you liquidity, and okay, I'll expect some yield in whatever terms, right? And that is just determined by the opaque system that centralized players have built. And then you have all this wrapped or the markets that are in DeFi where not a too big or like a too small LP can go in and provide liquidity and earn some yield, which is on Aave, which is on Morpho, so for like WBTC or CBBTC. So there another problem is while these parameters are on chain, you can verify them as we do, but the problem is
it's not Bitcoin.
It's not Bitcoin.
Yeah, it's all wrapped.
If the wrapped assets goes under for any reason, right? So it could be like, they filed for bankruptcy. I don't know, right? So things went under like.
Or there's a protocol bug. Like,
I don't know, like
WPTC is pretty complex to mint and.
So now it's immediate debug and all the parameters that are on chain has no meaning, like, right? So that's a huge difference. Now, LPs can go and verify that on chain in our case. Oh, here is the Bitcoin, here where it is locked. And they can actually participate in the custody, which is the distributed custody network that we have built. For those who are interested, we're trying to like bring in the interested or those who would benefit from the business into this network, and LPs are one of them. So they can clearly verify and they can participate in it, like, which gives them an additional leverage or like a participation satisfaction that okay, I'm part of this and I'm verifying it. So now I think most of these guys, okay, when they listen to this and they're like, too good to be true. Like, oh, okay, is this happening? And there's like, okay, next thing's like, can I see that Bitcoin has get locked up in there? And so it kind of gives me a little bit of confidence. Yeah, I think we are just talking to those LPs who can take a shot at it and then give us that, probably a cold start problem, like, probably help us to, and we got some, but I think it's still not enough. That's something we are working on. It's a little bit of a challenge that we are kind of weathering out right now. Yeah.
Yeah. Two-sided marketplaces are always famously hard to build out. But and I guess as we wrap up, maybe if you don't mind walking through either of you, I guess what is like the user journey, right? I'm a layman's. I have, let's say, half a Bitcoin on a cold card or a Trezor or, pick your wallet, right? And sounds great. I like to take out, let's say Bitcoin's 100 grand, 25K off it. So half, 50% LTV, or let's 25%. You pick the numbers, right? I guess what is sort of like that user journey? What does that look like? Where does the Bitcoin sit? Maybe just kind of like the quick high level of like, hey, here's our tech. Here's what we built that's different. Just kind of walk through the baseline.
Sure. So today you have to use the app. In the future, we'll have distribution partners and they can integrate it with them. But today we'll just talk about the app. So today you open up the app. You say you want a $25,000 loan. You pull up the app. You drop in your Bitcoin. So you wait one confirmation for that, and then at that point, it's in our vault. And at that point, you can just go and say withdraw however much up to 50% LTV. So you do your withdraw. You get your 25,000 in USDC. You can transfer that off to your bank, to your exchange, to wherever you want. And that's your Bitcoin is gonna stay in that vault until you repay and withdraw it.
And then it gets sent back to the address for you to pick an address, probably.
Well, if you withdraw it, right now it'll withdraw to the on wallet app. There's sort of like two. There's the vault, which is the collateral for the line of credit, and then there's a wallet, which just kind of like holds
Got it.
extra funds, and then you withdraw that off.
To add to it, you get your own self-custody wallet when you sign up for Surge.
Got it.
Which is right inside the app. Like,
Yeah.
we are
Yeah,
not
I remember
touching
doing
this.
that.
Yeah, right. So either you can bring your own seed phrase, or you can generate one right inside the app, right? So that's the underlying user side of the story, and the vault, or the taproot address that is on chain is kind of controlled by you, the wallet that is inside the app, and then the DCN, which is the distributed custody network. So now either you need to repay the loan and then you get your Bitcoin back, and then you can transfer to any wallet you want, or you can keep it inside the same wallet. Or, you didn't keep the health. We clearly show the health of your credit line, where it stands. We encourage you to maintain it below 80, like 90% is like at that health.
Yeah, 90% is
liquidate
our
it.
liquidation.
So
point.
when that liquidation happens, we're gonna recover all the whatever debt and then send you back the Bitcoin that is
The differential.
Yeah, right. So that's a liquidation. And then let's say Surge goes under, we completely vanish, and we don't want to, of course, put our users under stress. So in which case there's a unilateral exit sort of a path where your Bitcoin comes back if after the credit time, which is 12
It
months,
just
right?
ages out.
Yeah,
Yeah.
after the term. So right now our terms are 12 months. So if Surge disappears, the self-custodied wallet will be able to claim your collateral.
Yeah, after the loan.
After the
cool.
loan. So 12 months is the max. So you can do whatever you want under the 12 months. That's the maximum cap we are setting in. You want to repay before, probably after 2 months, you can do it. You want to withdraw as much you want. You don't want that's another problem with the user experience in the existing loan products, that it's all predefined. You need to withdraw X amount and you need to pay X amount at X, whatever, right? So that's actually the rigidity of the system right now. But in Surge, we are able to kind of create that flexible experience where you can say, I don't want 25K now. I just want 10K, but I'll withdraw another 15K later. And I want to save on interest rate.
Right.
And the last thing I'll say there is it's a 12-month line of credit, but you can always refresh and add another 12
Yeah,
months.
we
And
can do
that's
that as
and
well.
that's just one more Bitcoin transaction. And you're just basically rolling over.
Yep.
Yeah.
But we want to keep it, at least for now, at 12 months so that customers feel that if we were to disappear, they'd be able to get their funds in a reasonable amount of time. But we're almost certainly going to extend that
Right.
past 12 months
Yeah.
at some point.
Cool, guys. Like I said, super excited for this. I think capital efficiency in self custody Bitcoin is super important to keep Bitcoin on chain and in self custody, and not everything gets sucked up to Wall Street. So super excited that you guys are building this. It's been great having you guys here at Presidio Bitcoin. Was anything else you guys want to add? But certainly it's Surge surg.com.
Surge.credit.
.credit. There you go.
Yep.
Cool.
Surge.credit.
Awesome.
Yeah, I think shout out to PB. You guys been like super supportive, especially for private beta.
A lot of good ideas, a lot of good feedback, good mind share.
Yeah.
Can't
I think
complain.
what else in the world, place that I can think of that I'll go and probably like do a private beta. I can't think,
Nowhere
anything
better than
else.
Presidio Bitcoin.
Nowhere better. All right.
Yeah, I think that's what's really, really helpful for us to like hear from them directly,
Mhm.
spend that like one-on-one time and like tell us like, hey Yash, this health meter is not clear. Can you please do it in this way? Or like, I'm not getting it. I think on the user experience side, hey, this flow was like a little bit confusing. I think it's so hard to get that from users.
Yeah.
Like you can't just like say, hey, let's do an interview, we'll get on a call and like discuss. That never happens. You have to like kind of walk with the user, listen to them. I think that's a wonderful opportunity that we had here in PB. Otherwise it would have been like, I don't know like how to think about it, like how to even approach it.
Yeah.
I don't know, like ask people to like do a
In person's always best.
Yeah.
100%.
Hey, if you're building for Bitcoiners, there's no better spot than Presidio Bitcoin.
Yeah.
So thanks, guys. Appreciate your time.
Thank you.
Yeah.